The news that we got today on AMC that caused the stock to rally over 23% was really the best possible outcome of the day before earnings that we could have ever asked for. And specifically, I want to make sure everyone knows exactly why the stock was up 20%. Like, how significant is this? And it's a little complicated when you get down to votes and court proceedings, things like that. So we're going to break it down so everyone is on the same page. As well as that, I want to talk about what's actually important on AMC earnings. What can be something said or data-wise or numbers-wise from AMC earnings that can cause the stock to rally exponentially, because not everything will be important to investors coming tomorrow with AMC earnings. Now, on top of all of that, I do want to go ahead and look at the technicals, because we are now, at the time of recording this video at 7:29 p.m., about to close above the 200-day moving average. And this is important for a couple different reasons, in which we'll talk about here in this video. So we're going to try to keep this one short, sweet, straight to the point. Hopefully it's not a super long video, just some things we have to clear up, make sure everyone is ready for the crazy day we're going to have tomorrow. So let's get into it, guys. You guys know the deal. Hit the like button, subscribe to the channel. Make sure to comment down below. What do you guys think about all of this information? What do you guys think about earnings coming tomorrow? How are you trading AMC? Are you buying more shares before earnings? Are you buying after? Let me know how you guys plan to play this. Now, number one, what happened today? Why is the stock up over 20%? And why I say this is like the best possible outcome that you could get before earnings is clearly we've been expecting good earnings. Clearly AMC is going to give us good guidance. Clearly certain things are going to be very exciting. And I think the markets will reward AMC based off of that alone quite a bit. Now, you add these other factors together, like the news that we got today that we're about to go over, the short interest being so high, cost of borrow rates being so high, literally these things that we've talked about over the last couple of videos now, over the last couple of weeks, it all comes together to create this bullishness that we've seen in AMC over the past couple of weeks, especially today, and which will likely continue tomorrow and the rest of this week. So what actually happened today was a Delaware court ruled that there will be a preliminary injunction on April 27th to go over the allegations, right? This is basically the start of a proceeding to see if there is actually a case here. This will be on April 27th, whereas you were supposed to get this vote on March 14th. That's an over month difference here. And from here, from where we currently are on February 27th, it is 2 months until April 28th. So even though AMC has not confirmed that this will be delayed, a 20% rally in the stock is telling you that it will be delayed. Now, I think upon the actual announcement from AMC, you'll get another secondary rally on top of that just based off of it. Maybe they announce it tomorrow morning. Maybe they announce it upon earnings. Either way, I think that is a bullish thing. But odds are from right now, you've seen a lot of that already priced into the stock with this 20% rally. Because what actually has been happening over the last couple of weeks, I've talked about this many times, is the arbitrage trade hedge funds have been doing, which is short AMC, buy APE. Well, it was wrong today. And when that trade started to go against these hedge funds, these institutions that were making that arbitrage trade, which quote unquote was a perfect trade, obviously not so much, well, they had a lot of off-sided positions weighted towards those AMC shorts, not enough exposure to APE. So essentially what happens is, at this point, hedge funds, they have to make a choice. Do we stay heavily short in AMC? Do we cover on our short positions? Or do we hedge out our large short positions? And based off of what we've seen today, maybe there was a little bit of shorts covering at some points where it was pretty explosive in AMC's share price. Odds are I would bet a vast majority of these hedge funds that had this arbitrage trade in effect just decided to hedge out their trade. whether that is buying calls for the rest of this week or for the next couple of weeks, or whether that is, buying some actual shares of AMC. To some degree, these trades were hedged out for because they were way too far on the short side, right? They were assuming this was going to go through. All things were going to be fine and dandy. They were going to make money on this arbitrage trade. Not so fast. Shows exactly how much they know. You would think these hedge funds would have seen this coming, but apparently not. So that is what caused this 20% rally here today. Let's discuss earnings. And really the only thing that is going to matter when it comes down to AMC earnings, or I should say two things. It is, when can AMC turn a profit, right? Are they free cash flow positive like they were this time last year? Is that a thing? If that's a thing, you're off to the races, hands down. If we're not there yet, what does the commentary and the guidance sound like from Adam Aron? That's going to be the thing that is the most important to AMC, besides if they somehow make a profit, right, or they're free cash flow profitable. That's going to be big. Not a lot of people are expecting that. We're expecting a loss of about 21 cents per share. If that's somehow positive, well, it's going to speak for itself. The stock is probably going to go up 40% tomorrow based off of that. It's not the base case. The base case, at least for me, is Adam Aron's going to give us really good guidance. He's going to say 2023 is going to be a stellar year. We're seeing very good demand to start this year, and we're going to be free cash flow positive, maybe turn a net profit by the end of the year. I think that in and of itself is enough to give you a 20% rally on top of anything else that is announced. Because keep in mind, guys, I know AMC doesn't necessarily trade off of fundamentals, but the fundamentals getting better with AMC is never going to hurt the trade. Never, not in a million years. It will essentially help dictate when shorts cover on their short positions. If a company is destined for bankruptcy, if there's a short squeeze, who cares? It's going bankrupt anyways. But if it's in the case of AMC and they can actually turn a profit and you're short on that company and they're not going bankrupt, it changes the dynamic a little bit, because after all, short positions, they don't expire, right? Somebody, if you lend out your stock to a short, you could recall that stock whenever you wanted, in theory. Does it happen all that often? No. So there's no expiration for short positions. If it becomes not worth it to be short on AMC, which I think that case got a lot stronger today, then you're more likely to get those short squeezes and to see AMC actually hold up very well. And this goes for other companies as well, not just necessarily with AMC. We're obviously talking AMC here in this video. Now, the last thing that I want to talk about here in this video is going to be the technical. So what is happening right now? And where we currently are, there's 3 minutes left in the trading day. AMC stock, the 200-day moving average is at $7.53 per share. You were at $7.58 per share. So you are 5 cents higher than this 200-day moving average. Now you're 3 cents higher than this 200-day moving average. It looks like you're going to close above this by at least a couple cents. At the very least, you're going to close around this, and it looks like you are going to hold up for the next couple of minutes. But either way you want to break it down, whether it's a cent or two higher or lower, doesn't take away from the point that you are above the 200-day moving average. And why that is really significant is a couple things. First and foremost, the 200-day moving average is seen as really a long-term gauge of the overall sentiment and price action of the stock. In other words, if you're above the 200-day moving average, you tend to get more bullish activity. You tend to see the stock hold up better on rallies. You tend to get the said stock. It doesn't have to be AMC. It could be any other stock. You tend to get better reactions out of earnings. Stocks tend to hold up better if they're above their 200-day moving averages. And really, it comes down to algorithmic trading programs and even retail investors. That's one of the big things I like to look at is how is the stock reacting on its 50, 100, and 200 day moving averages. When you're in a long-term downtrend like we have been with AMC, that 200 day moving average is a little bit more important because you can tell at that point there's a lot of trading algorithms that are based off of this moving average. And if we look at this in the past and go all the way back to the rallies that we've seen before January of 2021. You broke above the 200 day moving average about 4 or 5 days into the rally the first time around, when AMC got popular the first time around, when bankruptcy was still in the cards. And obviously anything can happen, but it's not in the cards anymore, at least not anytime soon. We're talking years at the very minimum, and that is if AMC could never turn a profit or never be free cash flow positive, which is not going to happen. Nonetheless, you got above the 200 day moving average. 3 days later, you rallied exponentially. You 10x'd in value. After that, you came down, you touched support levels, and you got close to the 50 day moving average, but you never broke under the 200 day moving average. You rallied from there. June, you see what happens. And then we finally broke under this 200 day moving average around December of 2021. And then it went a little bit higher, right? Because this is an average. Even if the price of AMC was going down, it's a running average. Now, the 200 day moving average really started to go down consistently around March of 2022. And around the same time, you got a rally. And you can see right here, it got rejected at this 200 day moving average. That is this blue tealish line that my cursor is on right now. And then it continued to go down. And then you got this other rally. And again, it held up a little better, but you still got rejected at this 200 day moving average, right? And at this point, you actually did rally after earnings. And the couple of days before earnings as well were big green days. And then you got this really big day that was 20%. And obviously AMC stock was higher in price at this point. So 20% did a lot more dollar for dollar to the stock. It looks different on the charts. But in those same regards, AMC got rejected at the 200-day moving average. Well, now a lot has changed. A lot has changed even from August of 2022, where you were fundamentally getting better, where the sentiment is starting to change. In August, that's when you got Jackson Hole with the Federal Reserve, and he came out and said, we'll do whatever we have to do to fight inflation. I don't care if stocks go down. I don't care if bonds go down. I don't care if we go into recession. It's the first time he said that. The markets absolutely started just plummeting at that point. Whereas now inflation's starting to come down. January might have just been a blip in the road. And the overall market sentiment will be able to reward AMC a lot better. Now, where are we at on this 50-day moving, or this 200-day moving average? It looks like it just updated actually, since, yep, it is 8:01 now. Now the 200-day moving average is at $7.52 per share. You officially close at $7.55 per share. So indeed, closing above the 200-day moving average. Now, what is unique about this is all throughout 2022, you were not above the 200-day moving average before earnings once. Not once. After earnings, in August, you broke above it, but not before. So considering you're above it right now could lead to an exponentially larger rally. And this was really the last level of resistance that we needed to break above, was the 200-day moving average. I've talked about this for a while. So from my standpoint here, if you do get, call it a 20% day tomorrow, that's going to put the stock at about $9.20 per share. If you get a 30% day tomorrow, that's about $10 per share. Now, if you get a 50% rally from here to close out this week, that's going to put the stock at $11.50 per share. Now, something even bigger is possible. It all depends on what is actually said on earnings, but I'll be the first to tell you guys right now, guidance as well as this vote, those are going to probably be the two biggest things. And then on top of that, any new initiatives that potentially could be announced. But really those two things, the vote and AMC guidance, and they're really more specifically than their guidance on profitability, are going to be key. If we get the best possible outcome here and things are bullish across the board and the stock reacts appropriately, in which I think it will clearly, then I think you're in store for the MOS. And that's the bottom line. I don't care who likes it, who doesn't, who's betting against it, who's betting for it. I don't care. This is my opinion and my opinion only. So let me know your opinions down below in the comment section. And in the meantime, hit that like button and subscribe to the channel as well. Thank you for watching, and I will see you in the next one.